we've used all the different forms of AI, whether it be ChatGPT or Perplexity, like 8 or 9 different ones. And it has then sort of learned which questions get answered more accurately by which AI format. So it kind of it's learning on its own, like what's the most accurate. So the more people who use it, the more investment summaries, the more accurate this sort of. So we're really proud of it. We think the biggest thing is going to be the time saving notion, in that it saves you, instead of spending 1-2 hours on an investment summary.
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor!
Now, here's your host, Dr. Alex Schloe.
Hello, everyone, and welcome back to another episode of the Physicians and Properties Podcast. I'm your host, Dr. Alex Schloe, and as always, I am so glad that you're here joining us for another episode. Today's podcast guest was fantastic. This was a really great episode. If you've ever wondered how to analyze a syndication opportunity, how to analyze a deal, and wondered about, hey, are there tools that are out there that make this a lot easier? Our guest today, Dr. Sam Giordano, is a board-certified gastroenterologist. He's an author, a real estate investor. He's the co-founder of PassiveAdvantage.com, which is a platform that is designed to empower physicians and high-income professionals with AI-driven tools for evaluating passive real estate syndication. Sam also has a passion for financial literacy and smart investing, and we had a great time talking about things that he's teaching residents in his training program and how beneficial it is that they're going to come out of residency and become attendings and already have this foundational knowledge. Sam's realized that there's a widespread need for objective risk assessment in syndication deals, and this led to them creating Passive Advantage. So if you want to know more about how you can utilize some of these resources and tools to take control of your financial future, then you're going to want to stick around and listen to this whole amazing episode with Dr. Samuel Giordano. Let's get started with today's episode. Dr. Sam Giordano, welcome to the Physicians and Properties Podcast. I am so glad to have you on the podcast today. How is everything going?
Excellent. Thanks for having me, Alex. I really appreciate it. And nice to get to know you a little bit.
Absolutely, man. You as well. It was great talking beforehand. And again, thanks for being flexible. I apologize for having to reschedule due to the flu. And then unfortunately, it sounds like it went through your house as well. So hopefully everyone will be on the mend here shortly.
I appreciate it. You as well. Thanks.
Thanks, man. Awesome. Well, thanks again for your time. Let's just hop right in. Do you mind sharing with the guests that are listening a little bit about yourself?
No, not at all. I appreciate the opportunity. And once again, thanks for having me on. Yeah, so my name's Sam Giordano. I'm in New Jersey, and been practicing now, I guess, for like 13 years. It's kind of crazy to say that since fellowship training. So I'm married. My wife's a cardiologist out here, and then we have 3 kids, ages 9, 7, and 4. So they certainly keep us busy. And so it's just been fun now that I'm few years out of training. I have a little bit of time to get sort of student loans thankfully paid off and get some of my retirement accounts maxed out and doing all that kind of stuff. So it's I teach fellows and residents in our training program, personal finance. And so, I always harp on them to kind of, I always heard from the white coat investor early on, like live like a resident for like 5 years. And then once you get some of the high interest credit cards and student loans paid off, you can kind of start loosening the purse strings and saving for a house. And so I ingrain it into all the residents and fellows now. So it's nice to be coming through the other side a little bit.
That's awesome, man. It's really cool that they have you to bounce ideas off of and to hear the importance of avoiding that lifestyle creep, because that definitely gets a lot of us when we go from residents to attendings and start making, at least some doctor money. So it's that's awesome that they have that for you. How's it been balancing family life with your wife as a cardiologist, with you as a GI doc, with having the 3 kids? How's that been for you guys?
Yeah, it's not easy. And early on, when we had our first kid, I remember the first week to this day when she went back to work, and she would come home, and every day she was basically like crying. Like she was like, I'm conflicted between being a mom and a cardiologist. And I was like, listen, you have to talk to your job, figure out what you want to do. So thankfully, because we had both of our incomes, because soon thereafter I was doing some of the real estate stuff on the side, we had some financial flexibility that she was able to cut down to 4 days after the first kid. And then once we had our third kid 4 years ago, she was now able to cut down to 3 days. So she works 3 days a week, which gives some flexibility. And then I recently cut down to 4 days a week to allow some additional family time, allow to do some of this, some of the real estate stuff that you and I both do on the side. And that's the beauty of some of the real estate stuff, which I'm sure we'll get into, where it allows you, if you do develop some additional passive income, it gives you some of that flexibility to where it can offset some of the financial loss if you were to cut down some time from your day job. Even though I love what I do as a doctor, there is some value to that flexibility.
Yeah, absolutely. No, I tell folks all the time, like, just starting to get some passive income is a game changer. It doesn't have to be enough to quit your job tomorrow, but just enough that you can cut back, even if that's just a half day less per week. Like, that extra time with family is so much more important, or extra time doing hobbies that you love. Like, it is absolutely worth the extra work initially to get those income streams, those passive income streams going. That's awesome. Well, I'm really happy to hear that. You guys just need to have a couple more kids, and then she can just go to like 1 day per week.
I'm waving the white flag.
yeah, exactly. That's awesome, man. I do have to ask one more question as a GI doc. I don't know if you heard me talk about this on the podcast, but in residency, we had a board that we would put funny like patient encounters on, or quotes or pictures or foreign bodies. And then we started a Instagram account that was basically like took that board and made it real life. And we started a segment called Foreign Body Friday on there. And this was, like 5 years ago. And
that's
6
hilarious.
Years ago, maybe. Yeah. And so we would.
It does seem like they always come in on Fridays, or at least get transferred to us on Fridays.
Yeah, they just fell on it too. And so we would post a picture and we would have folks guess what they thought it was. And then on Monday, we'd tell them the answer. It was awesome.
That's hilarious.
Long story short, the Instagram page is called Doc Turds. We haven't posted on it in a long time, but TLC reached out to us. I think it was TLC or their parent company. They reached out to us and they're like, "Hey, we want to make essentially a TV show that was Foreign Body Friday." So we hopped on a couple calls with their producer in the studio and all stuff. And we were like, look, we're a small regional hospital on a military base. Like, we're not really getting that many pictures of foreign bodies. This was all the residents over time had accumulated, these.
That's hilarious.
And so anyways, we talked to them for a while and we were trying to get them to have us host it. We never, at the end, we kind of never really heard anything back. And apparently one of my friends sent me on TLC or something, there's a TV show called Stuck, and it's essentially that. And I'm like, dang, we should be getting residuals.
So they actually did it behind your back, huh?
Yeah.
That's hilarious.
So if you're looking for show business, man, people love the foreign bodies. So I have to ask, what's the weirdest foreign body that you have pulled out of somewhere?
That's a great question. Let's just put it this way. It was alive and it had a tail.
Oh, no. Oh, gosh. Okay.
Thankfully, it was able to stay in one piece, but yeah, you see some crazy stuff.
Yeah, man. It's like, what are you thinking? We had, I'm trying to think of some of the good ones. We had the glass Starbucks, like iced coffee bottle. That was one, which was fun because you could actually through the x-ray see the logo and like see the Starbucks image. If Starbucks needs some marketing material, they could reach out. And then like the big spray bottle of sunscreen. Those are the two that come top of mind. And I'm like,
that just sounds painful though,
Yeah, like what are you thinking? I guess they were just applying that screen and wanted to get everywhere, I guess.
And the crazy thing is there's people who like there's stuff during the, around the end that you're talking about, but then there's other ones that people swear that they were just brushing their teeth and trying to get the back of their tongue. And then all of a sudden they swallow the toothbrush. Like, how do you even swallow a toothbrush accidentally?
I know. Everyone listening to this is going to go home and try.
Hopefully not when I'm on call.
That's awesome, man. Well, I had to ask because it's just wild.
It's a great field. I love the GI stuff. It's kind of like playing operation with that stuff all the time,
Yeah. Oh, that's fun, man. Yeah, I love GI. If I had to pick a specialty, that'd probably be the one that I'd want to do. I just loved learning about the GI system. It's just really fun, a lot of variability. Yeah, good stuff, man. So thanks for doing what you do. Thanks for pulling things out from every hole. And
you as well. Thanks for doing what you do.
Yeah, absolutely, man. Well, let's talk about what everyone's waiting for, kind of that transition or that pivot into real estate. So what did that look like for you from that perspective?
Yeah, so I kind of alluded to it before, but I'm pretty savvy with personal finance and teach it to the residents and fellows. And it's really not like like I said, I have to give credit to Jim Dolly at White Coat Investors. When he was coming around in like 2008, I think is when he started his website. That was around the same time that I was in residency. So it sort of coincided. Him and I are probably similar ages. And I was just kind of following him and doing what he said. And once you get the hang of it, it's not that difficult to like max out, especially if you're employed, to max out your pre-tax stuff, to do your backdoor Roth IRAs if your income doesn't let you qualify, to max out your kids' 529 or, contribute to your kids' 529s, pay off your student loans, no high interest credit card stuff, be sort of, be reasonable with like auto and homes. And that's kind of like, once you have that stuff down, which I try to get my fellows and residents to get to that point, maybe like 5 to 7 years out, depending on how many loans you have, then you kind of get this stuff on autopilot and automate your finances. Like it comes right from paychecks into certain accounts. And then all this stuff happens behind the scenes once you have it all set up, and then you don't have to do much. And then, I started contributing to post-tax accounts, like taxable accounts, to try to save some additional. But when in 2017, when there was the new Tax Cuts and Jobs Acts, where we lost the ability to deduct the state and local income taxes, just because New Jersey is a high tax state, I got hit pretty hard. I didn't plan enough for that. And I'm like, man, what do I got to do to kind of maybe ease up some of this tax situation a little bit? And a number of people mentioned real estate. So initially I was looking at doing something more active and maybe either getting a turnkey property, but obviously out of state isn't always ideal, versus like getting a quadplex or something like that I manage more locally. And the more and more I looked at it, the more horror stories I heard. And I was just like, what? I really don't want to get another job for myself right now. And so I came across real estate syndications where, basically if you're, depending on the deal, if you're an accredited investor, or if it's a five, without getting too complicated, but if it's a 506C or a 506B, if you meet certain income requirements, then you could basically invest in other people's deals where they buy either self-storage complexes or large apartment buildings, and you just kind of are a silent investor. And then you kind of, get some of the benefits of the passive income. So once I learned about that, I was like, man, this is almost too good to be true. Like, is this real, or what's going on? And then that kind of opened the rabbit hole into syndications for me. And that's sort of what I've been investing in over the last, I guess, like 7 or 8 years.
Nice, man. That's awesome. Yeah, again, so cool for the residents to have the opportunity to learn from you. I wish I had that, when I was in residency program. Luckily, I found bigger pockets and, probably was more interested in it than most. But, having a mentor and having faculty who understand the importance of personal finance and setting yourself up for success when you're a young attending or a fellow, like that's it's awesome. It's so huge. And I'm sure they're learning a lot about the benefits of real estate and whatnot as well by talking with you, and some things to think about as they go, into their higher years as an attending and get all that debt paid down and then ready to fully invest some more. So really cool, probably full circle moments for you, I'd imagine, from that perspective.
Yeah. And a lot of them, like you were saying, and I mentioned it to them. I'm like, this is something to keep in the back of your mind with the real estate once you get to that point. And then, 6-7 years later, those same fellows reach out to me and, what was that stuff you were saying with syndication? And then I give them sort of resources and books that I use to kind of help with the learning process, because, these are things where a lot of them have, a pretty high barrier of entry in terms of the minimum investment. So I don't want to really guide people to just be like, this is what I would invest in. It's more so, let me help you educate yourself. I'm here for you to bounce things off of. If you have questions, I can tell you the things I look at. And, I'm at a hospital. I don't know how big your hospital is, but I have 700 other physicians at our hospital that come up to me all the time with different, and some of them want to get into the nitty gritty details, and other ones kind of just want to know what it is I'm doing. And once again, I'm always a little bit uncomfortable, especially because of the sort of financial obligations they require to just do that. But I'm happy to educate. And that's sort of the inception of how, because I really wasn't looking to form a side business or anything like that. But that's sort of the inception of Passive Advantage, in that I wanted to have some sort of resource that I could point people to, that I didn't have to just have the same conversation all the time without being like, this, check some of these things out, or I wrote this ebook, and then I can better guide people in a more sort of direct way as to what some of the key factors are to look at if they decide to invest in some of these deals and incorporate real estate as part of their overall investment plan.
That's awesome. What are some books or resources otherwise too that you recommend, that you provide the residents, or if someone comes up to you in the doctor's lounge and they want to know more, what are some of those like first ones that come top of mind for you?
Yeah. So, I mean, just like basic finance books, I think Jim Dolly at White Coat Investor, not giving him enough credit, but he has sort of his main initial book. I forget he's since had like a boot camp and a couple other different varieties of the book, but the first one is excellent for like a one-stop shop in terms of basic personal finance, setting up, life insurance, asset protection if you have kids, and estate plans and things like that. In terms of automating things, which I'm a big believer in, just kind of taking our emotions and our sort of out of the equation. I love the book, The Automatic Millionaire. I think that's a great book in terms of automating things where it sort of harps on how you set up certain accounts and you have different things coming and going without really doing anything. And then I think the last one that's kind of got a cool flair in terms of it's sort of like a younger flair, but it also has a lot of good information. It's kind of like a hybrid between the White Coat Investor and the Automatic Millionaire. I think his name is Ramit Sethi, has a book that's called I Will Teach You to Be Rich. So from a basic personal finance standpoint, those are three of the ones that really kind of had an impact on me in terms of getting some of the automations in place, making sure I have all the sort of structural foundations to where when I'm right out of training, I can kind of get that stuff squared away and then I can build on it from there. From a real estate standpoint, there's a couple other ones that I'm happy to give you as well. But as far as the personal finance ones, I think those are three of the top ones that I would start with.
Yeah, those are really good. And if folks want to keep reading more, Set for Life by Scott Trench is a really good one. And then Why Doctors Don't Get Rich by Dr. Tom Burns, that's a really good one as well. Yeah, so there's definitely some great books out there and a lot of learning. And it can be overwhelming, but it's also like if you went to med school and got into residency and especially if you're already graduated residency and survived residency, you can 100% figure out personal finance and investing and do well. It's like you mentioned, it's not really that hard. Especially, if you follow like Jim Dolly's principles and how he has things set up and automated and taking the emotion out, like you mentioned. So you're not just selling as soon as the market starts to drop and all these other things, like just set it and forget it. I love real estate, but I do think that there's a place to be, in the stock market and invest in your Roth IRA. And for me, TSP and some of these other avenues, I think it's good to be balanced from that perspective. And you can also use the IRA to invest in real estate if you really wanted to and go from there. So there's a lot of flexibility and kind of crosstalk amongst the different kind of asset classes.
Yeah, it's weird how in the space, in like the personal finance or the real estate space, it's sort of like polarizes people where they're either like all real estate or all stock market and index fund stuff, where I'm like you, I'm kind of like in the middle where I think there's a role for it in all, like, if we look over the last couple of years with how rapid the interest rates rose, like real estate's a little trickier right now. Whereas some other people that were all real estate, not so much in sort of the residential and stuff, but in terms of the syndication world and things like that. Whereas some of those people are now moving back into the stock market, or at least having a portion in the stock market to where it kind of diversifies them a little bit. And I think it's the other way around. A couple of years ago, a lot of people in the stock market were seeing what was going on in the real estate and the syndication world and wanted to get in that. So I think the name of the game, especially when you do what we do, like when our primary job is being a doc and a father and a husband and it's really just about sort of minimizing risk, but getting some of these benefits that we talked about to add some overall flexibility. I think it's really about diversity. So whether you talk about within like overall investment plan from a stock standpoint, from whether it's a taxable account, a Roth account, a pre-tax, I think there's value to all those within that, but then also having some real estate in, because I really look at the REITs as more of I don't really look at that as much of a diversification as that's more of like a stock play. But I do look at some of the sort of syndications and other investments as a diversification. Within the syndications, then once you have the financial wherewithal to do so, then you can diversify into multifamily, self-storage, mobile home, other different asset classes, then diversify across different sponsors. So it can get pretty granular, but once you have that, then it's just a risk mitigation strategy, which I think is good to do. And you can't always do it all instantaneously. Like you can't have instant diversity unless you don't have index funds for like real estate stuff. They do, but it's not the same diversification. But especially in real estate, you need a little bit of time to get some of that diversity that we're talking about.
Yeah, I completely agree. My buddy Brian Lubin, he was just at Tony Robbins' like platinum event, and he was saying that he sat down and had lunch with 3 billionaires, and he basically asked them, kind of about their wealth building journey, and a lot more for them was about wealth preservation at this point. And so he asked, he's like, how do you build a portfolio that's that large but also risk mitigated? And the consensus was that you need to have at least 8 different kind of asset classes that you're invested in, and that will mitigate about 80% of your risk over time. And so he said all of them have some degree of crypto, and all of them have some degree of investments in the stock market, and a bunch of different real estate asset classes and small businesses, fine metals and like all these different things. And that helps you, be more diversified, and also helps you, mitigate risk from that perspective. So kind of interesting, because I think for a time, as you mentioned, the whole kind of like FIRE movement and real estate is like, oh, you should just be all in on one asset class, and that's what you should stick with. And I don't agree. And apparently these billionaires don't agree either. So I'm going to trust that. But yeah, I think it's certainly important to pick what you love and kind of go all in on that, but also be mindful of diversifying in other streams. And like I mentioned, I love real estate. Residential assisted living is the big thing that we invest in primarily. And, we're going to put most of our eggs in that basket, but we got eggs in some other ones just in case. And so just important to think about from that perspective.
Yeah, no, I totally agree with you. And that's what I tell some of the residents and fellows who are like, well, what do you think about Tesla, or what do you think about Apple, or what do you think? And I tell them, I said, listen, I'm only a stock picker. One, I don't pick stocks, but if I do, I usually leave it in my Roth account. So it's not anything where I have to deal with any taxable events or if I sell or buy. But I say the only time I do that is if I feel like I have a competitive advantage, because there's people who do this all day, every day, meaning, picking stocks and buying and selling and all the automations and different things that go into it. Like I have no chance in that space, except if it's like a GI specific thing. So there's like, it's not so much like tips. It's just that I'll see something new and I'll be like, this is not going to do anything, and it's not going to work in the GI world, because there's only so many GI docs in the country. So it's not like there's millions of GI docs that can, know how to, figure out if this thing's going to work or not. But if I see something that's fairly new and I'm like, you know what, I like this, or it's a good medication or something, then I'll invest in something like that. Not so much like I said, because it's like a tip or anything. It's just that I can use it and see that this is something that works, but that's my competitive advantage. So that's the only sort of exception that I would make, because I feel like I have that. Whereas in other spaces, I have no chance. So it's easier for me just to do index funds and kind of figure out what my proper ratio is between, total US or international or emerging markets, and then just kind of let it go that way. Otherwise, I just feel like it's more so gambling and a little bit of a game, especially in the stock market,
Yeah. The game's rigged for sure. Yeah. I've only had 2 kind of wins in the stock world picking stocks, and that was Tesla and then Dutch Brothers Coffee. I don't think there's any in New Jersey yet, but hopefully coming. But Dutch Brothers is a huge thing out here, and it's kind of like a little coffee stand, if you will. But they have tons of amazing drinks. It's really fast. Everyone's really happy to work there. There's a line 24/7. Like, it's really good. Like, honestly, I would pick Dutch Brothers over Starbucks or some of the other big coffee chains.
That's awesome.
Yeah, my wife and I were like, man, every time we drive by Dutch Bros, there's this huge line, and they're getting people in and out fast. And so I heard that they were going to IPO, and I was like, oh, I'm buying some stock in Dutch Bros. And luckily that's done really well. But those 2 wins definitely don't offset the losses for the others that I tried. That was just like catching a falling knife or something like that. So, but no, I completely agree that competitive advantage is helpful. I mean, I think a lot of primary medicine docs, as we started here in GLP-1 agonists, get talked more about like maybe considered investing in some of those companies and those sorts of things as well. So I think I think if you have a competitive advantage, sure, go for it and make sure that that's a small piece of your portfolio that you don't mind completely losing, because otherwise the index funds are going to do way better. And I'm definitely,
and it's less stress because you got to pick like when you got to be right twice. So like you got to pick when to buy and when to sell or when to get out. And it's just, you could get lucky sometimes, but it's just hard to know exactly when that's going to be. But I think there's a point like my Roth isn't my biggest account. So I'm comfortable kind of like messing around a little. I mean, there's some basic like total market and stuff like that in there that I kind of leave too, but where I can kind of mess around and it's not like I have to worry about the tax implications of buying and selling and stuff like that,
Yeah. Yeah. No, those are great points. Well, let's pivot into real estate a bit. So got into syndications. What did that look like as you started exploring syndications more? Maybe what did that first syndication deal that you did, what did that look like for you?
Yeah. So, for those of you who don't know, syndications basically are where, generally whether there's multiple asset classes that it's sort of used in, whether it be self-storage, residential living, senior living, mobile home parks. And a lot of times what happens is there's a certain amount of debt that these banks are willing to give the sponsors or the general partners in order to buy. Let's just use an apartment complex or multifamily for as an example. So say they're willing to give 65% loan to value. So they can get a loan for 65% of the offering, then they would have to raise 35% of equity. And some of that may be their own, equity that they're putting in themselves. And then they would have to then get investor capital. And that could come in the sense of like retail investors, like you and I are, or it could be family offices or, private equity groups or, depending on how that sponsor wants to orient their sort of business plan. And so we would, as the syndications that I invest in, we come in as like a sort of a retail investor where a lot of these investments may have like $30 or $40 or $50,000 minimum. So it's not insignificant. So I spent like a whole year kind of educating myself on what it is to invest in a syndication, what are the key metrics, and just being like, all doctors are a little bit OCD, not like in a negative sense, so I was just sort of writing down all the different things when I would read certain books, listen to certain podcasts, Bigger Pockets, the same kind of thing. Everything I said, what, that sounds like something I should write down. Then I formed this sheet, multiple sheets, and then I put them all together into like an Excel sheet that I would use for myself when I was getting these syndication offerings, which typically would come in the form of like a 55 page pitch deck or investment summary where I would go through and say, what's the location? Is their population growth there? Are people moving there? What's the jobs? What's the schools? What's the crime rate? What's the fee structure? What's the splits between the limited partners and the general partners, meaning me and the sponsor? And then, then get more granular. What's the rent growth? So I had all that in this Excel sheet that I then used whenever I would get one of those, so that it would just be like a fail safe, that I wouldn't like miss something obvious that was like a big red flag. And I would use that for myself. And then eventually I sort of commented on it when I was on one of these other these private sort of passive real estate forums that I'm a part of. And I was like, I was using my Excel sheet and blah, blah, blah. And then next thing I know, the next day I got like 100 private messages asking me to use the Excel sheet. And that was sort of the inception of what we call passive advantage, where I then partnered with an Excel genius to kind of set up the sheet and go through the metrics. And he also had real estate experience. And then we sort of, made it something that other people could use. But we found that the negative of it was that there was still manual components where you still had to go through that investment summary and still go through those checkpoints. And even though it would keep you from missing anything obvious, that was a high risk point, it would still maybe take you an hour or so, especially once you got fast at it. to go through that. So then we tried to pivot to a way that we could take out some of that manual component to make it easier, more approachable, more digestible for passive investors that maybe didn't want to spend all that time and get that granular with it.
That's awesome. Yeah. What a great tool to have, because there's definitely a lot that goes into evaluating syndication deals, evaluating the sponsor, making sure it's a good opportunity. And unfortunately, you've probably seen it. I've talked to multiple docs, like, a lot of physicians don't get the personal finance knowledge like you provide for your residents. And so a lot of them don't get that. And so they can easily be preyed upon by folks. And so I think it's really important that people have some sort of resource, whether, that's Passive Advantage or the Excel document that you guys have, or something similar that's going to help them analyze those deals most effectively and make sure that they're not being taken advantage of, because unfortunately that does happen. So really, really cool that you've done that. I know, and I think kind of where you're headed in terms of kind of next iterations of that was incorporating some AI. Is that correct into the system?
Excel sheet, even though it was really helpful and it kind of served as a foundation, because is not really to say like you should invest in this deal or should not invest in this deal. It's more so like a risk mitigation, or that you would see where the risk points were. So we always had it to where even in its Excel form was like drop down, and then depending on what the characteristic of the deal was, it would then turn the cells either red, green, or yellow, depending on how risky that particular metric was. So it's really just sort of a risk point analysis to where you could say this part of the deal seems to be a little higher risk. And even if you still want to invest, you could then go back to the sponsor and say, listen, can you explain to me what the reasoning is on this particular thing? So in doing that, the second component is that there was an education part of it, and that after you've put in several deals and got used to the different metrics, then you start to think about it yourself in terms of this sort of lattice or this foundation of like, what's the stuff I really need to look for? And so, but we kept, we grew pretty quickly to where now, at the time of the Excel sheet, we had probably about 1,500 investors in our group who had purchased the sheet. And then more recently, we were getting more and more emails from these investors saying, listen, is there a way to take the manual component? Like what people had suggested, could we have the sponsors fill out the Excel sheets, or could we pivot into something that's less manual? So then we sort of had to figure out what we wanted to do as a business and stay in the Excel form, or whether we wanted to pivot into more of a software. And then we enlisted 2 additional partners that were software engineers, that's all they do was kind of the software version of things, and then modified the Excel sheet into a software where now basically an investor takes an investment summary that they get from the sponsor. They pop it into what we call it the app. It's still the limited partner deal analyzer, which is what the Excel was, but now it's the app. And it kind of answers like 70 to 80% of those questions that you had to kind of go through manually on its own. Now it's still AI, and it uses sort of a proprietary like AI agent, in that we've used all the different forms of AI, whether it be ChatGPT or Perplexity, like 8 or 9 different ones. And it has then sort of learned which questions get answered more accurately by which AI format. So it kind of it's learning on its own, like what's the most accurate. So the more people who use it, the more investment summaries, the more accurate this sort of the AI agent gets. And so when you put that investment summary in, it kind of pops out 80% of those things, those metrics pre-populated, to where you still have to check it because it is AI. But even like the little things where say you wanted to see, is this what's the population growth in Dallas, Texas, or a suburb of Dallas? Like, so you would use a zip code and then go to like city data or census gov, crime rating, or the school rating or niche or whatever. Now all of a sudden this gets the zip code from the investment summary and has all those market metrics all pre-populated as to what the variables are, without having to ever leave it and go to another site. So we're really proud of it. We think the biggest thing is going to be the time saving notion, in that it saves you, instead of spending 1-2 hours on an investment summary, you could get to that point in a lot quicker period of time, to where then you can go do it. Like you said, whether you want to go spend some more time with your family, do a hobby, or just do things you want to do, and not so much just trying to figure that stuff out. So it's pretty cool tool.
Sam, that's awesome. I almost sounded like a total dumbass earlier, because I was going to be like, hey man, did you know you could take those like the offering memorandum or those slides and put them into ChatGPT and it'll give you like some answers? So I'm
Yeah.
glad I did say that, because you guys are miles and miles ahead with what you're doing at Passive Advantage.
And you
That's
could, and you
awesome.
really could do it if you want to answer the questions one by one.
Yeah.
You know what I mean?
Yeah.
But then before you know it, you have to then, go back and kind of put it in, whereas now it puts it in an easily digestible format. And then it still assigns a color coding, and we have sort of metrics, that different variables that score more, like in terms of the key components, we have higher scores. So it's like uses like 125 different metrics to sort of get an overall score based on the risk of the deal. So it's, yeah, no, you're totally right. You can put it in yourself. There's some things that ChatGPT is not very good at. So then other sort of AI platforms are a lot better at it. So it's just this like trial and error and trying to figure out what works best. But it's pretty cool that we're able to save people time. I mean, I think that's the thing I'm most proud of, because it's just, I think the real estate space needs to be sort of changed, in a sense that right now there's a lot of limited partners that are sort of dissatisfied with some of the deal results and where things are, and capital calls and pause distributions. And then sponsors on the other side are also having a lot of difficulty raising capital. Like some people are raising like a third or an eighth of capital that they raised before the interest rate craze. So I think there needs to be sort of a bridge in between sponsors and limited partners to kind of come back together a little bit. And I think the key to that is the transparency, which is what hopefully this will kind of help to do, to get people more comfortable on both sides of it.
That's awesome. Yeah. Super cool. Here I am thinking about, ChatGPT and looking at one variable, and like you mentioned, still having a hand jam, and you guys have just figured it out, man. That is awesome. It definitely saves time. I mean, time's our most valuable resource, and especially, as busy physicians, even more valuable. And so it's really important to figure out, hey, how can you save that time wherever you can? But more importantly, how can you get the right answer to invest in the right investment that's going to change your family tree down the road? And so really important
Absolutely.
to do that. And that's awesome. What, maybe from your side of things, what are the asset classes that you like to invest in the most, or what are you seeing the Passive Advantage being used more for at this point in time? Is it still kind of more multifamily, or other asset classes that folks are getting more interested in?
Yeah, and I like having sort of an overall diversified portfolio. So I think I'm in close to 30 syndication deals at this point in time. So I would say maybe 50% is multifamily. And then I do have some self-storage. I do have some mobile home. I have some other asset classes, some industrial, some triple net stuff. So I think that ultimately, once again, this takes time to build that up. I've been investing since 2017. So it takes time each year. You got to figure out how much you want to put aside to invest in that. But the beauty of it is that if you don't need to use that passive income at that point in time, you can just sort of build it up and then use that to invest in other deals. And then before you know it, it starts to snowball. And then certain deals are being sold, certain ones, and then you redeploy. So right now the tool is mostly focused on the multifamily, but we're probably like 1 to 2 months away from having self-storage and mobile home. And then eventually we're going to pivot out to senior living. And then we'll also have one that's more focused on real estate funds, because I know a lot of people want to get into investing in funds, and that gives you sort of an instant diversification, but you have less ability to do some of this granular vetting unless you get sort of, details, which you don't get generally as much as when you do single asset deals from these funds. But there are still key metrics to look at, like how many K1 is it, with tax implications and things like that. So that's probably going to be the most. But our goal is to have all asset classes. So if somebody wants to get it evaluated, then we'll just kind of pivot into different metrics. And some of them is the same. Like if you think about the sponsor metrics, most of the how many full cycle deals have they ever had capital calls? Like some of the basic stuff that we ask everyone: what's the team? How many members are on the team? Are they vertically integrated? Do they have in-house property management? Like some of the stuff is sort of appropriate across different asset classes, but when you get into the more granular deal specifics, that's where it sort of deviates a little bit between the asset classes. But our goal is to have evaluators for all of them.
That's awesome. Super cool, man. Well, what are you excited about in the future? It sounds like, kind of growing, of course, and adding more asset classes. What else are you excited for? What else are you working on in the future, but whether that's professionally or in your real estate adventures?
Yeah, sort of professionally. So as of about 6 weeks ago, I had mentioned I kind of took Fridays off. So I'm still working the 4 days a week, but it's nice to have that flexibility to be able to have that extra day, both in terms of spending some time with family, having a dedicated day to do some of this real estate stuff and focus on that. Thankfully, a large part of the sort of engineering build out, and I wasn't hands on in that, but just kind of like involved in the process, which is completely foreign to me. It was a learning experience trying to figure out how to speak the language of some of the engineers that we have, but they were awesome and they created an awesome product. But now to be able to just iterate and figure it out along the way. And I think, in terms of what I'm excited about with the real estate specifically is that right now we have the Passive Advantage app where individuals, limited partners go in there, they put in the investment summary, they get 80% or so of the questions answered, and then they go through and figure out like, what do they have to tweak? Like, did AI answer that right? Is it not right? And we make it as easy as possible. Like, we put page numbers of the investment summary in the answer to where somebody could look and go see where they got it from. The goal is eventually that the sponsors will be the ones answering those questions so that by the time it gets to the LP, they won't even have to do anything manual at all. And then ultimately our sort of the thing that's sort of the mecca of what we want to achieve is to have a marketplace where all the deals within the marketplace have these pre-filled out sheets where instead of getting an investment summary, you'll see all of these variables. So you won't wonder like, what's the acquisition fee? What's the asset management fee? Is it a return on capital or return of capital? Like, that'll be all in there and you won't even have to go back and ask the sponsor. So that sort of marketplace pivot is the thing I think I'm most excited about, because I think that'll really be beneficial to the space for both limited partners and sponsors as well.
Yeah, absolutely. That's so cool. Well, I'm excited to hear more and see more about what Passive Advantage does now and into the future and see that marketplace. It'll be cool to just have a one-stop shop for everything right there and have that transparency, which is much needed. That's awesome. Well, Sam, if folks want to reach out to you, they want to learn more about the Passive Advantage or how they can utilize that for their next deal, how can they do that?
Yeah, no, I appreciate that. So they can go to passiveadvantage.com and there you'll see some free ebooks. We have an ebook that's sort of the basics of the benefits, some of the stuff we alluded to of real estate syndication. I recently wrote a 30-page capital call ebook, which is all about like what you need to look at if you do get the unfortunate news that you're being faced with a capital call, like how to figure out if you want to participate in that and what the rules are behind that. And then we host monthly webinars. We have a webinar coming up February 25th, and we usually host different, like on February 25th, we're digging into like what you need to look at in regards to vetting the sponsor. And so we usually do one aspect or one key component of what's important in syndications with those webinars. So that's something that people can, these are free, you just kind of sign up so that's something that might be helpful. And then ultimately, if they want to reach out to me personally, they can reach me on my email, sam@passiveadvantage.com. I'm happy to answer any questions, whether it be doctrine related or whether it be real estate or personal finance or anything funny, whatever people want to share is free game for me.
Sounds good. Yeah. Send the foreign body pictures to Sam, but also include me as well. Alex@physiciansandproperties.com. That's awesome, man. Well, Sam, this has been
maybe we'll have our own TLC show. Forget the other stuck or whatever it was.
Yeah. Well, yeah, you can be the GI doc who pulls things out. Yeah. And do it. There we go. That's the business model. Awesome, man. Well, hey, this has been great. I really appreciate it. Thank you so much for coming on the podcast and excited to see it continue to grow and love seeing everything that you're doing, man. So really appreciate it.
I really appreciate it as well. Thanks for having me on, Alex, and best of luck in all you do. Let's definitely stay in touch.
Yeah, absolutely, man. Well, with that, it's been Sam and Alex with another episode of the Physicians and Properties podcast. Signing off.
Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews. and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only and should not be considered financial or medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.